So we're going to discuss about forex trading, and this is going to be the most basic video you would have seen when it has to do with forex trading, because I know that everyone who is starting out in trading actually wants to go to chart analysis, want to see buying and selling opportunities. You want to see candles, you want to see opportunities to make money. That is good. After all, that is the main reason why everyone goes there. But there are basic things that everyone who wants to trade Forex has to know. And so this is what we are going to talk about today. The first of them is, what is Forex? If you hear this Forex, what does it mean? Forex, as it is this: Forex. Forex means foreign exchange. That's what it is. Foreign exchange. So let me bring it here. This is FOR, stands for foreign. Okay. Forex. FOR is foreign. EX means exchange. So when we say Forex, we mean foreign exchange. That's what we are talking about. So when someone says what is Forex, just know that it is foreign exchange. That's what it is. And so it's not something different. It's not something you need to think too much before you will realize, before you will know. It is actually what it is. It is foreign exchange. Exchange means that someone is here giving to this person here. All right. And this person in return is giving something back to this person. That is what exchange is. So exchange means that someone is on one end giving to one person, and the other person is on the other end giving to the other person. So that's what exchange stands for. So when you talk of foreign exchange, you mean where two people are giving, one of them is giving to the other person, and the other person is in return giving something else. All right. So that's what it means to exchange. In those days, it used to be barter, trading by barter. This one, maybe he needs rice, the other person needs yam. So the one with rice brings rice, the other one with yam brings yam, and they do what is called barter, exchange. The one that needs rice, that brought yam, takes yam home and gives rice to the other person. That is the exchange. So when you talk of foreign exchange, what you simply mean is that in this sense, we are exchanging foreign currencies. That is what we are exchanging, foreign currencies. So Forex means foreign exchange. Let's get that understanding. So the man in red and the one in red and the one in black, they are exchanging something. The man in red is giving to this one in black, and the one in black is giving something to the one in red. So that is the exchange. So it is always going to be that way. One person giving to the other person, and that person in return giving something else. So that is the meaning of Forex. The next thing is trading. What is trading? Trading is the exchange of goods and services. Let's assume you are a driver. They employ you at a company to be their driver. You go there, you render services, they give you money. You are exchanging your services for money. And then let's assume you are a trader, you sell one or two things in the market, and then you carry your goods and you go to the market. You give to the one who wants to buy. You give them what they want. All right. And they give you cash in return. That is also trading. So trading is both exchange of goods and services for the purpose of money or any other thing in return. But then is something you are going to get in return when you give something else. So in that case now, it is still exchange. Either you're exchanging your skills for money or you're exchanging your goods for money. That means you have something that you can make profits out of. So whatever you give out is like your capital, and whatever you get in return is like your profits. That is what trading stands for. You are not just clicking buys, you are not just clicking sells. You are not gambling. All right. If it were to be gambling, it would have been like you are predicting something. But in the sense where you talk of trading, trading has to do with seeing what is real, seeing what the market is saying to you. You enter a market and you see how things are going. You decide to buy or sell. Let's assume USD now. Let's assume dollar is behaving somehow. You think it is going to rise. What do? You buy the dollar. When it rises, you sell it back. So when you sell it back, you have made what? Profit. That's difference from the starting point to the point where you sold it. It's now what you call your profit. So let's assume you bought dollar from this point with the hope that it is going to rise, and it rose actually to this point. All right. This whole environment becomes your profit. This whole difference in the movement from the starting point to where you sold will become your profit. So you can see the weight of your profit. All right. So where it started here, it started, it started here, and it rose until this level, and then you sold. See the length of this arrow. That is the length of your profit. But let's assume you bought from here, this point, with the hope that it would go higher, and then it started going lower. And you decided maybe when it got to this point, you said, no, I don't think I can hold this anymore. You closed it. At that point where you closed it, that becomes your loss. That's what you lost. Because things change. All right. And why this is not gambling is because you actually saw it before you acted. Please note what I'm saying. You saw it before you acted. You didn't guess it. If you find yourself guessing, then you are gambling. On the same environment where some people are trading, some people are gambling. And that is not what you want to be doing in the market. So don't make mistakes about it. You have to see it before you act. So if you are not seeing it and you started acting, you are not trading, because nothing is there to exchange. It's just like going to the market. You are throwing in money into the market, hoping to get a profit. What are you throwing money at? You're not throwing money at anything. But if you actually saw an opportunity to buy something and sell the other one, then you do it. You traded. If anyone were to ask you, what did you do? You would say, I traded. All right. So you made a trade. So that's what it is. Exchange of what? Currencies. And you have to see the currencies before you exchange. Who are the traders? Who are the ones trading? Who are those moving this market? Because you're actually coming from somewhere to see the market. So imagine yourself, you enter a big market now, like let's say physically, and you see people moving up and down and all the rest of them, and you decided to sit down. And while you sat down, you observed that a particular red vehicle passes every 2 hours. And each time that vehicle passes, it goes from that point for maybe another 30 minutes journey, and then it returns again after 2 hours. He decides to say, okay, I'm going to wait for this. In 30 minutes, this bus is going to come out and I will join it. All right. You are not the driver. You are not the vehicle, but you're just a passenger. So in that case, you join the vehicle going where it is going. When you reach there, you drop off. But if you wait for that vehicle, it never came, then nothing happened. You wouldn't do anything. But when in 30 minutes time you see that vehicle, or in 2 hours time you see that vehicle and you join, then you are right. So you are not the trader. The trader are the big banks, the hedge funds. They are very big people who have billions of dollars which they trade and make profits from. So your job, your position in the market is to observe their actions, how they are trading, where they have buy interest, where they have their demand, where they have their supply, where they want things to happen, or where they are doing things. And then you join them. What you're doing is to join them. So you won't decide the market. That means your opinion or your analysis is not what moves the market. Please note this. Your opinion or your analysis is not going to affect the market. What affects the market is those big boys who trade the market. They are the ones affecting the market. So you're just like a passenger, joining them to where they are going and jumping off whenever they say, okay, the journey ends here. You jump off, you go with your profits. After all, there is chance for people to make little profits. But then, however it is, that is who you are in the market. So you are just like a passenger joining the big boys who are going in a certain direction. What is Forex? Forex means foreign exchange. What are you exchanging? Foreign currencies. What is trading? Trading is the exchange of goods and services with the intent that you're going to make profits. Of course, we said exchange is the same as trading. And we gave you examples with barter, where people used to bring things they had in time past to exchange for profits. All right, so have this in your head so that you know what you are doing. And then who are the traders? The traders are the big boys who have money, banks, hedge funds, who are making exchange. Another way, the people who are also traveling, they are buying and selling currencies. So Forex is not a Ponzi scheme. So they are the traders, big banks and all the rest of them. And then who are you in the market? You are a passenger. That's who you are. You are just joining them. Please don't make mistakes about this. Thank you very much for watching this video to the end. So drop your questions and wait for the next video. See you there.